AMC mortgage.
Anything new?
Like, I mean, how are the banks responding? Because I mean, I feel like, you know, at any time banks are pretty much the same as far as products you guys offer.
Mm-hmm.
However, it seems like what I've learned over the years is you guys tend to have maybe those one or two little niche products to differentiate yourself from the rest of your competition.
Right.
Is there anything interesting that you guys are doing right now to help people?
I really haven't seen anything new come out, which sometimes we do see new things when things get interesting, like the cash offer program. You know, we had that for a while. Mm-hmm. We're not offering that anymore because the market shifted.
Right.
We do still have a bank statement program for self-employed people.
Can you explain that a little bit?
Sure. So typically when somebody is self-employed, we take 2 years of tax returns, and that's how we average their income over 2 years, and that's how we look at the taxable income, and that's what they qualify on. Well, a lot of times self-employed people will write off so much that they don't have enough taxable income to qualify for what they want.
Yeah.
So a bank statement program throws those tax returns out the window, and they look at bank deposits for 24 months or 12 months, and that's how they calculate income, is based on deposits.
Okay.
So that is really good. The only downside to a bank statement program is it does typically have a little bit higher interest rate because it's a non-traditional loan. It's not regulated by Fannie and Freddie in the same way. So that's the only downside. But if it's your only choice, then take it and refinance later.
Yeah, so that's what I was going to ask. So if you if you use the bank statement product that you guys offer, and then in a couple of years interest rates, let's just say hit 5%, and somebody wants to refinance into a fixed 30-year, they can do that?
They can. They can do that. And that also gives them time to file their taxes a little bit differently so they can show more income, and then we can get them back into a traditional loan.
Okay, yeah. Well, I mean, I think that's helpful. I mean, as a self-employed person personally, it's like I always have to play that game, you know, and it's not always easy. And it's like, I want to buy this property for me or for an investment, and it's like, we need all this stuff back. So it's like, ugh, because I'm not super organized.
Yeah. And a lot of self-employed people file extensions, and they don't actually file their taxes until October.
Right.
So there's always like a lot of stuff going on with self-employed people. So I think the best advice you can give anybody who's self-employed is to get on all that early before you fall in love with a house.
Sure.
Because if you fall in love with a house and then you've got to get on all this stuff, you just set yourself up for frustration.
How often does that happen?
A lot. Because buying a house is so emotional.
I know it.
People, if they fall in love with a house, they want it. They're going to do whatever it takes to get it, but they're not always ready.
I know.
And so if they would just take a minute, get ready, then go find the house and fall in love, they just eliminate so much stress on themselves.
Yeah. Oh no, I from personal experience, I totally understand that.
Yeah.
But that's the thing, when you're ready to buy something, the house shows itself.
It does.
You want it. And,
I know.
And you always figure out a way to make it happen.
Yeah.
When you got to get unless you haven't actually filed your taxes, that's always the hardest part. But I do understand what you mean.
Yeah.
I mean, I've seen it more times than I'd like to, and it's like, man, it's like, you guys can get this, but you guys are gonna be real busy for
got a lot of homework to do.
You got a lot of homework to do. Yeah.
Yeah.
And then the question is, well, why do I have to do all this? The answer is, if you want the house, you must do it.
Mm-hmm.
There's they're not going to make a special exemption for you.
No, and one of my favorite things to say to people, because they'll often say, well, you don't need all this stuff. You can look at this document, and you can see what I make. Well, it's like, well, this is the loan process. You got to throw all that common sense out the window. We have to document everything. It all has to match up 3 different places in your file.
Yeah.
We have to have all of it. We can't just take your word for it that this is what you make.
Well, I will say that, when I was new in the business and I was working with older couples going through all the new regulations that we had, because there were a lot of changes after 2008 and 2009.
Absolutely.
I mean, just a ton, and the paperwork tripled easily. Really on all sides of the business. And people were saying, well, Max, I didn't have to do this last time I bought a house.
Right.
When's the last time you bought a house? In the 80s. Well, things are different now.
That's correct.
And so what I don't run into as much, since I would just say the overall demographic of buyers and sellers is not quite as old. They didn't buy that long ago. It's like, it's nice to know that, like, hey guys, this must be done. Like, okay, with not too many arguments. Right. There are always those people that don't want to provide stuff.
Correct. And I think the one thing that comes up a lot for me is gift money. When someone is getting gift money from like a relative or a family member, Well, 20 years ago, we didn't have to paper trail it the way we do now.
Yeah.
And especially on an FHA loan where the gift giver not only has to fill out a gift letter, but they have to provide their bank statement to show they have the ability to give that gift. Well, gift givers get mad.
Oh, I know.
And they say, I don't want to show you that. That's none of your business. Well, then you're not going to be able to be a gift giver if you can't show that. We don't need that on conventional loans, luckily.
Sure.
But FHA is just a little stricter.
Yeah.
And so we got to know where that money's coming from and that it's legitimate, that it's yours to give.
Well, and I think it's so great. The FHA gift has been a huge help for a lot of my clients over the years, and it's going to continue to be for most buyers in the market, I believe. And I think when parents or grandparents or whoever it is that's giving a gift can help their kids get into their first house, I mean, it's not just a gift of money. It's really a gift. It's a long-term gift to help them start building credit, building equity, building all those things. So it's, it's a real important tool that FHA allows and conventional allows too, that I think is, I think it's fantastic for real estate.
Right, I do too. FHA loans in general, I think are fantastic. I mean, a lot of people think that, because it has mortgage insurance, it should be avoided at all costs, but that's not true. It's just a tool that allows more people to buy.
Yep.
And so I think when you look at it with that kind of perspective, that it's just one more way to help somebody get a leg up and buy a house. It's a good thing.
Yeah.
Yeah.
Buy the house.
That's right.
Where you can keep on renting.
You can keep on paying someone else's mortgage.
Yeah, that's your choice, and it's not always the wrong choice for certain people in certain periods of their life, but if it's time to buy a house, buy the house.
Correct, I agree.
And then you always have options later to get into some other type of loan if you want to.
That's true. So many people that buy FHA end up refinancing into conventional.
Yeah.
And
how many years does that take typically?
I think it just depends. Like in 2020 and 2021, when prices on houses went up, a lot of people were able to refinance a lot sooner than normal, within a year or two. And suddenly they had enough equity that they could do it where it made a lot of sense. They didn't need any money at the closing table because they could roll it into their new loan, get a lower rate, and they would still end up with a lower payment than what they had.
Yeah.
And so it was an amazing time to refinance. So it just depends on market conditions, how long it's going to take. But for most people, if rates drop and your house prices are up, it's a good time.
Yeah. And that's, and the rates have increased, so, I wouldn't tell people to refinance unless there was something happening.
Right. We still have people doing cash out refinances, even with rates up.
Yeah.
Because, sometimes people need a little extra money to fix up something on their house, or they've got a big life event that they need to pay for.
Yep.
And so, and I'm talking, anything from weddings to, car, like people take cash out for all kinds of reasons. And they still do it even when rates are up. So, that's always an option if you've got the equity.
If you have the equity, and that's the deal. It's like you got to have the equity.
Yes.
And you don't ever have the equity until you own a house.
Correct. Yeah. So you have to look at your house like a savings account.
I wish more people would do that because that's how I've always looked at it.
Me too.
And it's like I was curious if I could do this when I started. When I bought my first house, I bought a condo, and after we sold the condo and bought our first house as a family, my mortgage payment was, I don't remember what my interest rate was, but my mortgage payment was like $1,000. And so I was like, I wonder if I could build enough equity and to keep rolling my equity into my next houses to keep my payments at $1,000. And so first one was $1,000, second house was $1,000, and now with the equity that I've been carrying over, my current home is $1,000 as well. It's actually $1,400, and the only reason why it's $1,400 is because my taxes are more. But I live in a higher taxed area, which is, it's increased my equity a lot.
Right.
Aside from COVID, it's still, so it's like, I accept it. I was like, oh man, but it's like I accepted it because the benefits outweigh that cost, I think, long term. So, it's like, if you're smart with your equity and you roll it properly, that's really how you make a lot of money in real estate. and that's why I'm not a huge fan of refinancing unless it's necessary.
Right.
But I know people do it, and that's fine.
Mhm.
I know people don't do what I do for a living, so
Yeah.
they just have a different perspective on real estate. That's totally normal and fine. But but I think if we take our equity and roll it into the next house, I don't know if I'm going to keep my $1,000.
Mhm. Yeah. Another thing too that people can do that they don't often think about is, let's say you're in a house already, even if you make one extra payment a year,
Yeah.
you can shave off like 7 or 8 years and all that interest.
Mm-hmm.
Why wouldn't you do it?
Sure.
Like, do it, you know?
Well, and I think a lot of people don't simply because they're not going to be in the house for 30 years.
Yeah.
I'm only going to be here for, we know statistically people are going to go through 7 different properties in the buying cycle, and that's from the National Association of Realtors. It's usually that kind of like third or fourth like family home where people want to stay put for a while that I think that's where kind of things will slow down for them until their kids get out of the house or out of college or whatever, and they downsize, for kind of the last couple. But, if you're a new buyer, I'm going to live in this house for 15 years, you're probably not. You're probably only going to live in it for 5.
Right.
And historically with my clients that tell me they're going to live in it for a long time, most of them lived in it for about 5 years, and then they sell. And because life happens,
It does.
things change. A lot of different things can happen for you in 5 years, especially, that's the thing, when you're in college and you're kind of like making your plan for your life, and then you become, working adult in the working force, and your real adult life starts. It's like things change very quickly.
Yes, they do.
Surprisingly fast.
Yes, they do.
And because of that, housing needs change.
Right.
And
for sure.
And
I think that's such an interesting thing because when you're young and fresh out of college, you don't think about your future in terms of, what if I get divorced one day?
Yeah.
Or what if there's a death, or you don't think about these life things
Why
that
would
can
you?
really change your life.
I know.
Yeah. So life happens to everyone, and especially in divorce situations where you'll see someone's credit just get wrecked.
Yeah, I know.
And they weren't planning that. That wasn't part of their plan when they graduated from college.
No.
But life happens to everyone, and that's the thing is just because life happened to you doesn't mean you can't be a homeowner. And that is a huge thing to remind people about is that, you can always fix your credit. You can always save some money. You can always be a homeowner.
Mm-hmm. Yeah.
Yeah.
I think that's good.
Okay.
Yeah, I think that's good today.
Awesome.